with Edward Jones. We have Ryan Bleiche with John R. Wood. And then we also have Jennifer Tenney with Tenney Law. And we came up with this theme because long-term care insurance, there's a lot of questions about it. There's a lot of different ways to look at it, and that's why we brought the panel in we brought today. So we can look at different scenarios, hypothetical scenarios. We can look at policies, we can look at purchasing policies, so on and so forth. So this is really your event. We're just here to facilitate it. Due to COVID, we are also going to be streaming this live on Facebook. So if anybody gets to the Golden Care Facebook page, it will be streaming live. So we can touch more people that are uncomfortable actually coming on site with us. So at this point, I'm going to turn it over to Adam Kokorin, our moderator. And Adam, again, is with Golden Care Home Care. So, and thank you all for being here today. I really appreciate it.
Good afternoon, everyone. Can you guys hear me okay? Yeah. All right. As Carrie mentioned, my name is Adam Kokorin. I'm the Director of Business Development for Golden Care. We are a home care agency here in Southwest Florida. But I am super excited about this topic in long-term care insurance. Being an end provider with long-term care insurance policies, I see the value in people who do have long-term care insurance to really truly understand how to use them and what's out there and what's available. So I'm looking forward to a very interactive discussion here today with our experts in the industry. So I encourage questions. If you have something that you're wondering, you jot it down, you just want to ask, happy to jump in and kind of address that right there and then. Back about a year ago, I've been focusing on long-term care insurance, specifically in my industry, for the past 3 years. But when COVID hit, I said, I want to even go further. So I actually went and got a certification, certified in long-term care, to really sharpen my tools and understand a little bit better. So let alone what I do in the home care space, we also actually offer complimentary long-term care insurance reviews for folks who might have a policy that just want to know a little bit more about how to use it and the nuts and bolts of their policy. So there's some literature in the back about that, but before we jump right in, I want to do some brief introductions. I told you a little bit about myself. I'm going to let the panelists tell us a little bit about who they are and what they do and why they do what they do. So first, I'm going to start with Bob Weigel, Financial Advisor with Edward Jones. Bob?
Good afternoon, everybody. What I do is I assist individuals in all aspects from a financial perspective. So really looking at, the idea of you work too darn hard for your money, not to have your money work for you. So as a result, what does that look like? Think about the different daily, weekly, monthly, annual aspects of a financial plan, and that includes long-term care. So that's the dialogue that we're going to have. My focus is to really help to educate and advocate for the individual, and then look at the different opportunities that present themselves to reduce risk as much as possible. Ryan?
Thanks, Bob. My name is, can you hear me okay?
Yeah.
Help with this mask. My name's Ryan Bleiche. I'm with John R. Wood Properties, which is a residential real estate firm here in Southwest Florida. Family-owned business. We've been here since 1958. I haven't had the pleasure of being with the company since 1958, but I've been there about 5 years. I've been practicing real estate in the area for 16 years. I spent about 11 years selling, in the past 5 as the managing broker for John R. Wood, and I oversee the sales operations for our Marco Island markets, Isles of Capri, South Naples, East Naples, and Old Naples. I'm married. I have 2 daughters. They're 9 and 12. So things are getting interesting in my house at the moment. But I love what I do. I love working with the agents and helping them problem solve and, being an asset for them to allow people to buy their dream home or sell and be able to do whatever long-term plan they're hoping to accomplish. So that's a little bit about me. Thanks.
Hi, I'm Jennifer Tenney, and I'm an attorney. I own my own firm on the Mark Weiland Tenney Law. And I've been an attorney for 17 years. And I spent 15 years with Woodward Piers and Lombardo on Mark Weiland. They also have a Naples office there. I've lived on Marco my whole life. And then just last year in August 1st, 2020, I opened my own law firm, Tenney Law, right there on Mark Weiland as well. So I've been specializing for the last 16 years in estate planning and probate and real estate and elder law. And I just took my bar certification exam last Friday for elder law. So I should have my bar certification in elder law as of June this year. So I love doing estate planning more than anything because I am an attorney who hates fighting. I really do. I hate it. I found I hated conflict. I do like to debate sometimes, but I hate conflict. And I really found that the more decisions you can make, the earlier you can make them, the less fighting there will be after you're gone or even near the end of your life when you're planning to have a peaceful end and a comfortable end. So by making decisions like whether you want long-term care insurance or not is something that you can plan for today and then have peace tomorrow when you have a way to pay for whatever you need for long-term care. So it's something to consider as a planning tool. So, and that's my motto is plan today to have peace tomorrow. I do what I do because I love hearing people's family stories. Every single person is different. Every person has different finances. Every person has a different family or different heirs and a different story and a life story. So I like to help people plan to meet with that.
Excellent, excellent. So just by a show of hands, who here in the audience has long-term care insurance? Who's looking at possibly protecting themselves with long-term care insurance during this aging process? Yeah? Okay, good. That gives me a good grasp on understanding exactly where to kind of navigate through the conversation. So what's important to really understand is why get long-term care insurance? What is long-term care? So when we look at long-term care, we're really looking at care needs for this aging process to, in general terms, help with activities of daily living. As we get older, there's going to be opportunities where we might need assistance with day-to-day things like help with showering and exercise support, or as simple as just cooking and cleaning. So Bob, I'm going to start with you in asking, when we talk about looking at the risk of long-term care or needing long-term care, what is the family's financial risk? Because we know long-term care is not cheap, right? So can you address that?
Sure. To go a little bit further on what Adam said just a few moments ago, long-term care is really identified as being 90 days or more. And the question is, what is that more? Some individuals are going to have some level of assistance that's necessary either inside of the home or outside of the home for perhaps 10 years, perhaps 12 years. So that 90-day time frame to 10 years is really a question of what's the cost. When we look at different aspects of what things are in terms of those financial responsibilities, not only to perhaps the couple themselves, but respect to the entire family, it is the single most expensive option that comes into play. We think about what we are now. We don't necessarily think of what we're going to look like or what things are going to look like in the future. And so the model becomes, how much risk am I willing to take personally as well as with my family versus how much can we push to some other option such as long-term care insurance.
So, and you bring up a good point, and actually it was asked that when we were speaking, if we could just drop the masks, so hopefully help. in talking about the costs associated to long-term care, I always find it interesting. And I'll tell a little about my story. You know, Hurricane Irma hit us all in 2017, right? And I think we all knew a little bit about what happened there. Shortly after, I live in Virginia Springs, and shortly after, I live on the cusp of a flood zone, and my wife's like, we need to get long-term care, or we have to get a flood insurance. I'm like, no. The hurricane already came and went. We're good. And she's like, no, but for the next one. And I'm like, well, there's not going to be a next one. But it's that same mentality. We look at this day in and day out. We have no problem purchasing auto insurance every single year, hoping and praying we never get into a car accident. If you look at the statistics around the need of long-term care, you know, someone over the age of 65, there's a 70% chance of someone over the age of 65 needing some level of long-term. How long is long-term care? And I appreciate you mentioning that, not to get confused with, like, if you're going in for a scheduled knee surgery and you're going to rehab for, 6 weeks, that's not considered long-term care. We're talking about this aging process and getting resources in. And again, it's not necessarily cheap. We want to protect ourselves and be proactive. So I want to say kudos to you all for actually even being here and educating yourself on protecting yourself as we age. Because the reality is we're living longer, which is a beautiful thing in some respect. But with that comes higher risk of needing support. So I asked the panelists to provide some questions, some ice-breaking questions. Bob, I want to kind of stay with you real quick. Your question is, I'm young, I am strong, I have resources and assets, I have family, I'm pretty sharp. Why should I plan for long-term care now?
We don't plan for today. We plan for tomorrow. We don't necessarily plan for tomorrow in its essence as being 24 hours, 48 hours in advance. We try to plan 15, 20, 30 years in advance. The longer in advance that we can plan for, the more opportunity there's going to be in order to take care of what we want to have happen. So take in your mind's eye and look at yourself, reflective, regardless of your age. Reflect on what you look like at 5 years old, just physically. Take another reflection and look at what you look like from your senior graduation photo from high school. Let's take a look at you again when you were 40, perhaps. How about again back at 65? If you're not quite 65, think about what you would look like at 65. Now, depending upon your age presently, look in your mind's eye at what you will look like at 80 or 85 or 90. Hopefully you see the stark contrast between just simply physically what you look like then and what you are like now. And if you're looking at that future, the question is, I am strong presently. I am young presently. I have assets presently. And I have family that will take care of me presently. The question that comes into play is, what are those things going to look like 20, 25 years, 15 years, or perhaps tomorrow? As we contemplate long-term care, we really have to do the planning not only for what things look like today, but what things are going to look like in the future based upon our understanding of the data and the facts.
Great. So I think it's also important to address, what does long-term care insurance help cover? Now, it would be unfair for me to sit here and explain every single policy because that's not even realistic. Some policies cover in-home care, like Golden Care would provide. Some policies cover assisted living, memory care support, or skilled nursing facilities. Most cover both, okay? So again, the qualifying factor is more so that need of activities of daily living. In most policies, generally speaking, it's 2 of the 6 activities of daily living that would qualify cause someone to initiate a claim and or a cognitive impairment. Okay, so that would be another qualifying factor for someone to initiate a claim. So again, we're not thinking here today, I don't need help with dressing or toileting, or I'm pretty sharp, I don't have cognitive impairment, but what does 20 years down the road look like? As I said, we're living longer, but with living longer comes some of these ailments. I'm gonna jump over to Jennifer. Jennifer, you had a great question. It's actually one of my favorite questions. But wait a minute. I have Medicare, right? Medicare should cover everything, right? No. So I want you to address a little bit about what does Medicare cover, and then we can kind of side talk about Medicaid and other issues. But more specifically about our traditional Medicare coverage, what does that cover for me? Does it cover long-term care?
So it covers only a very limited amount of long-term care. The amount of long-term care it covers is 20 days, and that's only if you have 3 full days as an inpatient in the hospital. And to be honest, hospitals will play games with that because sometimes you're in the hospital for 3 days, but you're not even checked in as a patient. So you have to be checked in as a patient for 3 full days and then discharged to a home or to a facility. And then it'll cover 20 days of actual care under Medicare. And then it will cover another 80 days of co-insurance. So basically, you will co-pay with them, and it'll cover, Medicare will cover a portion, and you'll cover a portion. After 100 days, it doesn't cover anything left, nothing at all. So that's all your Medicare coverage for long-term care. Now, it will help cover some services, some home health care services in the home, like rehabilitation services. Sorry, I don't think it's working. Like rehabilitation services or other services that are ordered by your doctor as necessary for health reasons. But it does not have a huge amount of coverage even in the home. It'll provide for a limited amount of hours per week as prescribed by your doctor. So you really rely on your own resources, on insurance resources, or on state resources, in the case of Medicaid, to pay for that long-term care. Medicare is not really the insurance to pay for long-term care.
And I think it's also important to understand that when, let's just say, I like to tell stories that help understand what that scenario might look like, right? So say someone is hospitalized, right, for those 3 days, right? Now, you bring up a very good point. The status of observation, right, that's what the hospitals call it, observation. You're not actually admitted. You might physically be in the hospital, but if you're not in the admitted status, you're not technically counting for those couple of days. Let's just say you are admitted and you're there for the 3 days and you go to a rehab facility, you're right. On an annual basis, you only have 100 days that you can stay there, and that's it. And the out-of-pocket cost for a skilled nursing facility could be up to $375 to $450 a day. So I think it's important to understand that's why policies like long-term care insurance are going to protect people for future occurrences. And in staying with that conversation, let's talk a little bit about Medicaid, because I think a lot of people get confused with Medicare and Medicaid. Can you talk a little bit about the differences?
Sure. So Medicare is an insurance program, and you have your own insurance until you reach the age when you can qualify for Medicare, and then you get assistance with that insurance. So it's an insurance policy, just like your insurance policy when you're younger, that covers some kinds of treatments, and there's some co-insurance and there's some co-payments, and then you have your supplemental insurance. Medicaid is an assistance program for people who fall below the poverty level to help them pay for long-term care when they can't otherwise afford it. But it's important to know that it's people who, the aim of it is people who fall below the poverty level. So it's pretty hard to qualify for. There is ways to qualify for it while not completely making it so that you have no assets. In basic terms, in order to qualify for it, you can keep your home in Florida. Your home is a exempt asset. You can keep $2,000 other than that. You can keep your car and one other car if it's over 7 years old. You can keep your personal property. You can keep a prepaid burial plan for up to $2,000. And you can keep life insurance for up to $2,000. And that's it. And so you have to spend down to get to those resources, or you have to create a special needs trust to get yourself down to those resources. If you have a married couple and one spouse is well and one spouse is sick, they try not to put the well spouse in the position of being destitute. So the well spouse can keep approximately $130,000 in cash as well as the home. But that's, you know, in the long term, if you're fairly young, that's not a lot of money that the well spouse gets to keep. So a lot of what I do is go over those options and see if Medicaid is actually a resource that you can potentially qualify for, or even if you could, do you want to use Medicaid? Because to be honest, Medicaid does not pay for every long-term care facility. It does not pay for a lovely facility like Discovery Village. The places where you can get a Medicaid bed are limited, and they aren't the nicest places. They are places that provide the care you absolutely need, but they aren't the nicest, and they probably aren't the goal of many people when they come to me. You know, what you have to look at is, where do I want to be? What kind of level of care do I want to have? And how do I afford that, and how do I get to that, and how do I make sure that I don't run out of money while doing that? And so that's Medicaid. So it's basically a program for people who are impoverished, who need help to pay for their long-term care when there's no other options. It's also known as a program of last resort. So they use long-term. If you have long-term care insurance, you have to use your long-term care insurance before you qualify for Medicaid. But what's interesting is the state of Florida is a qualified program for qualified long-term care insurance, and it's called the Long-Term Care Insurance Partnership Program. And I don't know how much these policies cost, but there are policies out there where every dollar you spend on long-term care insurance actually is another dollar you can keep above that $2,000 that you can keep and still qualify for Medicaid after you've spent the long-term care insurance. And that's because the state of Florida wants you to encourage people to use other methods to pay for their care other than Medicaid. And Medicaid is there if you've exhausted everything else and now you still need help. That's what it's there for.
Excellent, excellent. Thank you. Brian, I'm going to jump over to you real quick because we talked a little bit about holding an asset as a home. It doesn't really affect your Medicaid ability. Who here owns property here in Florida? Perfect, excellent. The real estate market right now is hot, right?
I would say that, yes.
Let's talk about it. Let's talk about it. What is going on with the real estate market in Southwest Florida?
All right, so yes, as Adam alluded to, the real estate market is, we could describe it as crazy right now. Looking back, let's go back to the beginning of 2020. This was, you know, we kind of knew a little bit about coronavirus and had heard about it on the news, and it was in China, and we weren't thinking much about it. So January and February of 2020 were good months. Start of season, we tend to see a lot more real estate activity, more listings coming on the market. And then all of a sudden, things started shutting down. So most of March, most of April, people were in their homes, protecting themselves. A lot of businesses were closed. You know, as I'm sure many businesses took a lot of proactive steps to cut costs. We didn't know what to expect. I don't think anybody would have guessed what the outcome was going to be, starting probably in June of 2020. We've had nearly, well, I guess about 10 months now of record real estate activity in Southwest Florida. When you look at, we look at the numbers a couple of different ways. Sometimes we'll look at it a certain month this year compared to a certain month last year. It's kind of a subsample to look at. But just to kind of give you an idea, when you look at February of 2021 compared to February of 2020, which was a very good month, closed sales are up 62% in 2021. Days on market is down 24%. So the average days on market in the Naples area is actually about 72. It doesn't feel like it. It feels like it's about 2 hours right now. But it actually, when you aggregate everything, it's 72. The tough thing that a lot of buyers are encountering is our inventory is down about 70%. So in all of Naples right now, there are only 2,200 properties for sale. To give you an idea, 1,307 sold in February. So we just have a little over a month of inventory in the Naples area. Equilibrium in the market is probably somewhere between 6 and 12 months typically, depending on how seasonal that development is or that part of town. If you are thinking of selling, it certainly is a good time to weigh your options. We're definitely seeing a premium being paid by buyers that are coming to the area. We are seeing a tremendous number of people relocating or accelerating their retirement plans from the Midwest, an increasing number from the Northeast, taking advantage of no income tax in Florida, more tax advantages with homestead, better lifestyle. And, when you think back what we went through in 2005, that boom, it's very different than that in the fact that the properties we're selling now, the buyers are end users. The buyers are looking to use the property, they're looking for the lifestyle. They're primarily cash. It's very difficult to buy a house right now, unfortunately, if you're financing. We're running into some appraisal issues because values are going up. So that's something to keep in mind. But just in the last, when you look at it year over year, average sale price in Naples, and this isn't really a good indicator of like inflation or the actual value of your house going up. It's just more of a sample of what has sold. But the average sale price is up over 20% in Naples. When you compare the trailing 12 months ending this February to the trailing 12 months ending last February. So things are pretty crazy. If you're thinking about it, be ready for a flurry of activity, multiple offers. But, we're fortunate in that people want to be in our area and we have a lot of options. And it's a good time to consider selling if that's something you're considering in the near future.
Can I answer that a little bit?
Please, yeah.
Yeah, because what I had said about, to qualify for Medicaid, your home is exempt. And that's true. But that being said, many of my clients, when they're looking at their finances and they're looking at their long-term care, if the ideal for them, especially if they're struggling in their home, is that they would be better off somewhere where they can have more care, then, a lot of times the option is better to sell the home and have the cash to get in the facility and the place where you're most comfortable. I mean, you've worked all your life to have the level of care that you deserve and not to just preserve your house for your heirs. So, rather than preserve the house and qualify for Medicaid and impoverish yourself in order to get state, approved care at a facility you might not enjoy, a lot of times people, rightly so, take the option of selling their home, taking that money, going to a place where they're comfortable, where they're happy, where they feel good, and that's the right, I think, personally, that's the right move to take if that's the way that if that's the resource you need to use to get the care that you deserve, so.
And a lot of people, I think, are looking at the market as an opportunity if they're considering a beautiful community like Discovery Village to transition into. Maybe now is the time to consider that transaction. So my question is, and you mentioned on it earlier, what if you get a flurry of different offers from multiple people from coming from north or what have you? How do you handle that?
So it can be a little overwhelming. I'll warn you going in. I spend about half my day talking with the agents through these situations. It's a good problem to have. I think the biggest benefit is setting the expectations with your agent, and then the agent setting the expectations with potential buyers and other agents up front. We've had some very successful scenarios where we orchestrated it such that we knew the property was going to be very desirable as soon as it hit the market. So we said ahead of time, we are going to put the property on the market, let's say on a Thursday, and we're going to have an open house Saturday and Sunday, and then the seller will be responding to all offers Sunday evening or Monday, so that you have a chance to attract as many buyers as possible to the property, hopefully as many offers as possible. Everybody is treated fairly, they're given the same opportunity. You kind of create a highest and best scenario right from the beginning. Actually, one of our agents is in the audience, and this was her brainchild, but when you set it up properly, I think it leads to the best results for you as a seller, both best experience, least disruption to your life, because selling a home, I always tell our agents that it's good for you to sell your home every once in a while, so you understand the stress and frustration that comes with it. You know, it's not just, you look at it as your job, but this is people's lives and their families, and it's a huge interruption to have to allow people into your house, especially in this market where you might have 20 or 30 requests to see your home in 2 days. And have 10 or 12 offers on your home, if it's the right type of property and in the right condition. So really, it's about having an agent that's experienced in handling those situations and setting expectations properly up front.
Ryan, can I just get a little piece of real life story that just happened? One, you have to have clients that are willing to play with you. So that scenario that you just talked about, our clients were very and they trusted us. So the things that are really important, you have to like and trust your agent. Those are the two most important. You might not like the color of their hair or how they parted, or their politics, or all those things that don't really matter. You need to like and you need to trust. You ask them in the seller's market to put together a spreadsheet when these offers come in. And you need to be very advocate. You have to advocate for yourself. If you're finding in your interview with your real estate agent, you're not really feeling the trust, you're not feeling it, there's a lot of us out there. We're a dime a dozen. Every other person has a license. But not everybody's skilled at doing this in any market. And John R. Wood is, if you have a John R. Wood agent, you can make some assumptions. Because John R. Wood does not allow every agent to hang their license on their John R. Wood hook, just FYI. So it's important for you to advocate for yourself and say, how are you going to demonstrate these offers that come in, Mr. Realtor? You know, what are you going to do? How are you going to make it so it's less impact on my family? This particular scenario came up because these people live in their home. And my husband and I were a team. We scratched our heads and said, how are we going to make at least impact their life as little as possible? They live there, they sleep there, their daughter lives there, they have dogs, they live there. So it's important that they have less impact. And that's where this idea of, you know, having it open 2 days, we'll have people come through, they can't come through any other time. So you're going to be disrupted 4 hours in this day and 3 hours in that day and then never again bothered. Wow, that's pretty nice to know that you're not going to have this go on for weeks and weeks. They have to vacuum and all the craziness goes on. So you want to have that skilled person that knows whatever the market is, that's how they're going to behave, but you need to advocate for yourself and ask a plethora of questions. And you're going to get a good feel for whether or not that person can handle selling your property. So, just wanted to add those 2 cents. You have to add it for yourself.
And I think, especially in a market, I think it's always ideal to align yourself with a broker that you trust, right? Especially in a market like now. So being aligned with John Wood would certainly be something that people should consider. I literally had a conversation with a family yesterday who said, there's a good chance this is up in Fort Myers, that I'm gonna have to sell my home to pay for our long-term care needs. This is a real thing. So Bob, I'm gonna jump back to you because it is a real thing, because we understand the cost of care. Generally speaking, in the home care space, I can speak in general terms, Southwest Florida's average cost of care for home care services is around mid-20s per hour, okay, to put it in perspective. An assisted living here in Southwest Florida ranges anywhere from $4,500 to $6,500 per month, depending on the level of care. And that can obviously go up with memory care support. And then private pay skilled nursing care, as I mentioned earlier, can be well over $10,000 to $12,000 per month. With living longer, right? And the majority of the crowd saying, well, I'm looking to protect myself. Let's talk about the finances behind long-term care insurance. Can you give us any statistics on what it costs right now?
Sure. So as we think about protecting oneself, the earlier protection, the better off one is going to be in terms of being able to get the most amount of coverage. So we'll actually get to some numbers in just a moment. But as we think about that, what does that really look like? Do I have money available in terms of a lump sum because I sold a home? Do I have something else available in terms of assets on a monthly basis in order to move forward? And as we think about those things, the earlier one looks at one type of a policy or another, there are different options. So there are 3 primary types of insurance. There's what's called a traditional long-term care insurance package. You're buying exactly what it is, only long-term care. That's it. If you don't use it, you lose it. Premiums are going to be a little bit less, but again, much like a car insurance or automobile insurance, if you don't have a problem, what happens? The money goes to the wayside. There's a second type of policy that's called a hybrid policy. What that does is that gives you a long-term care option. It's going to give you a death benefit number, and it's also going to give you the ability to surrender after 10 years, but surrender and either get 70% or 100% of the money that you put in back. That is a hybrid plan. But one of the other things that a lot of people are not aware of is a traditional life insurance policy that has a long-term care rider. You may already have a life insurance policy. It may or may not have a long-term care rider. And if it does not, there is something that's called a 1035 exchange, where you can take your policy, have it reviewed, and see if that's something that we can exchange for something that would have a long-term care rider. It may have a higher death benefit, and it may have a long-term care rider that gives you 100%. So let me just give you an idea, and I hate to steal a question that I already posed in terms of predecessor questions, but what is the latest in terms of point in time that I can buy long-term care insurance? And the answer to that is 80 1/2. 80 1/2. So I'm going to give you 3 numbers related to policies. And so with each one of these policies, these are just generic. I just simply identify them as being males because males are deemed to not live as long, so their premiums are higher, right? And so what I'm going to do is I'm going to take $200,000. You can use whatever number in a hypothetical you'd like, but $200,000 and provide a benefit. What does that look like? So for an 80-year-old individual, $200,000 will give $287,500 in benefit. Either long-term care or a death benefit, like your traditional life insurance. But wait a second, I'm only 60. So looking at that from the same perspective, the same $200,000 investment for a 60-year-old male will yield $709,000 in terms of benefit, either from a death benefit or from a long-term care benefit. Adam mentioned that you get into skilled nursing care, it can be 10, 12, 15,000. There are some here in the Naples market that are even higher, 25,000 a month, for example. What level of care do you desire? How much do you desire to be pampered? What does that specifically look like? My last example is take the individual who is 40 years old. Technically, anyone over the age of 20 has the ability to receive a long-term care policy. That same $200,000 for a male is $1,868,000. So if one recognizes not only for an estate planning perspective, but also for family planning related to long-term care, the earlier that one identifies that specific contract, the better off they're going to be in terms of policy to cost ratios. Please.
And I just wanted to add, I think Adam can speak to this even more so, but each one of these policies, is so different with regards to, Bob described 3, different options of policies, but even within those options, each one has a different amount of benefits it provides and how you qualify for those benefits. And each policy needs to be read in detail because they're not generic things. Like when you get title insurance, it's a very generic thing, but when you get these insurance policies, they are not generic. You don't know what to expect until you actually read the terms. Who didn't, I always give this to my clients. This is a printout that was prepared by the Florida Department of Financial Services. Our chief financial officer currently is Jimmy Petronis, so he puts his name on it. But it's done by the Florida Department of Financial Services, and in it, it has a really cool chart that I like to show to my clients, and it's a checklist where you compare 3 different long-term care policies, and it goes through and it asks you, in addition to nursing care, home care, which of the following is covered, and you click yes or no on each of these. For these services, how much does the policy pay per day? And then it breaks down each type, and you fill it out in the column. So you can start comparing these policies to, to make them apples to apples instead of apples to oranges, and decide, what looks best for you. And as in everything in life, you get what you pay for. I went on a cruise with my family, a beautiful itinerary in Europe to Croatia on the Norwegian Cruise Line, and I paid less than $500 for my ticket. I went on a Disney cruise on a similar itinerary, and I paid triple that. But when I went on the Norwegian cruise after, the difference in services, I kept having to repeat to myself, Jennifer, you get what you pay for, you get what you pay for, you get what you pay for. And it's the same thing in this. You get what you pay for. You can get better options, better benefits for more money. And you have to decide, what do you want? What's your ideal? What can I afford? What can I afford?
And just like we were talking about aligning yourself with a great real estate agent, I think it's equally as important to align yourself with someone like Bob, who is a trusted advisor, to really navigate through all these different types of policies. Because if you were to ask Bob 30 years ago, the policies looked much different than they do today. So having different types of riders and options as the hybrid, and I learned something new today even myself about the life insurance policy with a long-term care rider. So it is very interesting, and like Jennifer said, it's not cookie cutter. Some policies might make more sense for other people. How many people have witnessed them saying, well, my kids are going to take care of me, right? Don't worry about it, my kids will take care of me, or my spouse. We get that all the time. If you're going to have that be something that you're planning for, make sure you have those very transparent conversations with your family, because like Bob said earlier, you could be putting your family in not just financial risk, right, but a burden to them and their family. And that's why we have insurance products like this to help protect yourself for the future. So let's talk a little bit about if you have a policy. I've heard so many times people say, my premiums keep on going up, okay, and I'm getting fed up. Well, and I understand it completely. So husband and wife purchased a product 20 years ago, and it cost, let's just say, $2,000 on an annual premium back then, right? And now it's significantly going up by 20%, sometimes 30%, sometimes 40%, okay? And that sometimes is a hard pill to swallow. I try to help explain to people, though, the cost of care, right? So the same person who's saying, well, I'm just going to lapse on my coverage, let the policy go, because I can't fathom paying another $300, $400, $500 on an annual basis. Don't forget what we already talked about, the cost of care. That's one day in a skilled nursing facility. So don't step over dollars to pick up pennies here to save a couple bucks on the front end. I highly advise people who have policies, even with the increases, we have to understand we're living longer, we're going to need support. So, Bob, can you just talk to a little bit about the process of purchasing long-term care insurance? Is there underwriting? Can people be declined? Can you talk to me a little bit about that?
So much like any life insurance product, there is underwriting. So the question is one considered to be smoker, non-smoker? Are there any underlying conditions? And so there's a stratification of 5 different categories. So we have what we call like a super premium, and then we have people who have lower risk. So you're not necessarily precluded, you're not eliminated by certain factors that you may have, that you may think are going to get you out. By the same token, from a life insurance perspective, you've heard of the whole smoker, non-smoker issue. Well, now we start to look at something called vaping. Is vaping considered smoking? It depends. It depends specifically on the carrier. Some identify that vaping is smoking. Some identify that it's not. Some claim that even daily cigar smoking is not smoking. So looking at the specific policies and their specific language to underwriting, we can maneuver that boat in order to identify something that is going to be advantageous for you if you can qualify.
Now, oh, go ahead.
Oh, there's also some benefits that you can look for if you worry about that, of the premiums outpricing you, like you said, where you get to the future and you've been paying it for a long time and then the premiums rise. One thing is the state of Florida says they cannot rise because you have a condition. So because you develop Alzheimer's, they can't automatically, rise your premiums, but they can rise premiums as long as they do it on an all age basis. But some things you can look for in the policy is that some policies have as options and one's called a non-forfeiture benefit. So it provides a reduced amount of long-term care and benefits or shortened coverage period if your policy is canceled because you're unable to pay for it. So you don't lose all your money that you've already put in, but you can't pay for it anymore. If you have a non-forfeiture benefit, it means you just get a reduced care because you've stopped paying at this point. There's also what's called a contingent benefit, and you can see if they have that. And what that is if policyholders are faced with a significant rate increase and they're looking at it just as either I can't afford it or I don't want to afford that much, I don't want to pay that much, they can modify their policy. I think in the same way that you talked about with like the 1035 exchange, you can modify your policy to receive less benefits and then lower your premium at that point back to that affordable level. So it's good to find these policies with these provisions called either non-forfeiture benefit or contingent benefit that allows you some flexibility in the future.
And to piggyback on that, I've seen, because again, as I mentioned earlier, I help review policies on behalf of individuals. I've seen some of these options that the long-term care insurance companies are coming back with, and they do give you a lot of options. Some options would be like to increase the elimination period, which would be the amount of money that you would have to pay out of pocket prior to the insurance kicking in, or reducing the total bucket of money that's available to them, or their daily allowance. And even if they present you with 3 or 4 options, I've seen and witnessed that if you go back to them and propose an alternative, they're actually willing to work with you. To be honest with you, a lot of these insurance companies want to buy the policy back, because I think a lot of them are seeing the effects of people actually using their policy, which we encourage, right? We want people to take advantage of the benefits that they paid into. My personal story is my grandmother purchased a long-term care insurance policy, 20 years prior to her passing. She invested over $80,000 into a policy that she never used. And this happens all the time. So that's why it's really smart to align yourself with people who are going to help educate you through this whole entire process. Is there a magic age that someone should be looking at a policy like this?
20. As young as you can possibly think about it is going to be the best time to do it. So looking at all of the available information, what makes sense, if we can plan out 15, 20, 30, 40, 50 years in advance, the numbers, for example, we already gave you 1.8 million in terms of potential benefit versus at 80 years old, so 40-year difference. You're going to have $1.6 million in terms of a difference in potential care. And that's on a straight single pay option. But the earlier you think about it, the earlier you can plan for it. Just like with investments. When was the best time to invest? 30, 40, 50, 60 years ago, right? When's the second best time? Now.
Right. I want to ask Jennifer a question. This isn't necessarily pertaining directly to long-term care insurance, but there's not many opportunities you get to a table with experts like we have here today. So, Jennifer, do you mind touching on, I see families day in and day out say, I have my documents in order, and they don't, okay? A lot of families come from up north, and they think they have their wills, trust, everything set up, and they don't necessarily reciprocate. So you can talk a little bit about the process of what that looks like and why it would be smart to meet with someone like you to review if they do have documents in place, and if not, I can't tell you how many times I've spoken to families who are going later into that aging process and don't have their documents in place. So do you mind touching on that?
Sure. Well, as I said in the beginning, the more decisions you can make today, the easier you make it on your family later and yourself later. The more fights you can prevent. When you do take the time to do this planning, it's kind of like going to the dentist. I get it. It's not fun to think about death. It really isn't. Except for a few people. Some people really like to plan for it, but like 99% of my clients don't enjoy doing this process. But it's like a chore that feels really good when it's done, because you know that you truly have put everything in order. I always say to people, you should pretty much review your estate plan, at least for yourself. If you can't do it for yourself, then go to a professional to do it every 5 and definitely every 10 years. If you can't do it every 5, between every 5 and 10 years. And also when a big law change happens, especially with regards to estate tax, it's a good time to review it as well, even if it has only been a year. And definitely when you move from one state to another. First of all, becoming a Florida resident, one of the things that your home state will look at to see if you truly have put down roots in Florida is whether you have Florida documents. Another reason to make sure you have Florida compliant documents is probate is a heck of a lot easier with a will that complies with Florida law. To get it admitted is much easier than to try to get an out-of-state will that's signed in a way that was valid in that state, admitted in the state of Florida. We have to track down one of the witnesses. We have to get the judge to appoint a commissioner to take an oath of the witness, and we have to get an oath of that witness and file that with the will to get the will admitted. That whole process in itself takes, even at the very least, about $500 worth of fees, if nothing else. So even just doing, making sure you have a Florida will is very important. Now, trust law is very similar from state to state. So a lot of times I can review a trust that's from out of state and really just do it as simple amendment if everything's in order as you want it to be, that says that you're now a Florida resident and this should apply with Florida law. But what's a great review is, and a very interesting thing to do is when I do review that trust, which they say, is exactly how they wanted it to be, and I break down what that trust actually says, a lot of times people are shocked, and it is not what they thought it said. It's not what they wanted it to say. It's not what they understood it to say. So then we talk about what they really want it to say, and then we make the changes to do that. It's also important to have Florida power of attorney, a Florida healthcare surrogate, and if you wish, a Florida living will or advance directive that says what happens at the end of your life if you're dependent upon care in order to breathe and to live. Do you want to remain on that care if there's no hope of surviving from certain conditions? So the Florida power of attorney is a very simple document to do, but it avoids guardianship. It's a very powerful document to have. I charge a 15-minute fee to do a power of attorney, and it can save you thousands and thousands of dollars in guardianship to have that in place. A healthcare surrogate, meaning Florida law, is very important to have so that hospitals can very quickly decide who's your decision maker if you're unconscious, who can consent to treatment, who can consent to medication, who can get the information from the doctor because of HIPAA laws. They're protected, and they won't talk to just anybody. But if your healthcare surrogate presents a healthcare surrogate appointment, then they're going to get their information fast, so they can get the information they need to make the best decision for you. So it's very important to have your documents reviewed and to have them make sure they're up to date and they're what you want.
And while we're there, do you mind talking, because I get this question asked a lot too, is the difference between a do not resuscitate order and healthcare advance directives? Because I think a lot of people say, oh, I don't have a DNR,
Yeah.
but I have built into my advance directives. It's kind of confusing. Can you address that?
Yeah, a lot of times people call me and they'll say, I want a DNR. And I say to them, listen, I can't do that. A do not resuscitate order comes from your doctor. What that means is, and you have to do it after much discussion with your doctor, but what that means is that if you are struggling, if you have a heart attack, if you have a stroke, and you need the ambulance, the doctors to do some kind of medical action to bring you back to life, that they will not take that action and do those items. So a living will is very different from that. You have a heart attack and you have a living will. They do everything they can to bring you back. They do the paddles, they bring you to the hospital, they put you on the machines. You go on the machines, you are on the ventilator, you're on the ECMO, you're on whatever you need to do, and you try everything you can. But what your living will says, if you have a living will, is that, listen, if I have one of three conditions, if I have an end-stage condition, which is end-stage Alzheimer's or dementia, I'm in a persistent vegetative state, I'm in a persistent coma, or I have a terminal condition, so you're something you will die from, and I'm incapacitated, and two doctors both agree I'm not going to come back from where I am, then in that event, I would like to just have pain relief applied. I want all other treatment removed. Or in some cases, we leave in hydration. Certain religions want you to keep hydration, but I want all other services besides hydration and pain relief removed. And that's very different because they've tried everything they can to bring you back. Do not resuscitate. You've already said, don't try anything at all. I'm done. So, and if I leave me in peace. So that comes from a doctor. A living will comes from you signing in your right frame of mind, and you can do that with an attorney, or you do that at the hospital itself. If you're going in for elective treatment, they will ask you if you have a living will. If you don't, they'll give you the form right there. But of course, you have to know you're going to the hospital to have it in that setting. You also can do it through a document called 5 Wishes. So that's a document that's been approved from the state of Florida, which you can do yourself. You can download it online. A lot of churches have it. and you can go through it, and it's a discussion more on what your end-of-life wishes are. It goes a little bit deeper than a living will does, but it does serve the same legal purpose as a living will. So you can have all those options. When people come to me and I'm doing a whole estate plan, we'll do a statutory living will at the same time if they don't already have one. And it's really not a huge additional cost. It's kind of like thrown into that big plan. But if you have your whole plan, but you don't have a living will and you want to look into it, look into 5 wishes, and it's a great exercise to do. So.
The inner turmoil by individuals who end up making these end-of-life decisions is immense. The stress, the strain, the thought between different family members, or the one that does have the ability to make the decision. Are they doing what the rest of the family thinks is the right decision or not? By having the individual identify exactly what they want to have happen, removes all of that. It takes the decision-making away from other family members who will always, at the end of the day, second guess whether it was the right decision.
Yeah, absolutely. That's what another example of what I was saying. The more decisions you make, the less stress your family has later. Because now it's your decision. You made the decision to pull that plug to end that life. It's not on them and on their heart and in their mind. They know they're doing your wishes. They're taking care of you in the way that you decided already that you wanted it to be taken care of. So.
And that's why I think it's equally important to be aligning yourself with trusted advisors and having those open conversations with families, so everyone's all on the same page. A lot of the conversations that we've talked about.
Mr. Sullivan has a question.
Sure.
Yeah, what was the third state that you said, in life
sure.
state, or vegetative state, what was the third state?
Terminal condition, a
Terminal,
terminal
oh.
condition. So like terminal cancer, something that you will die, the doctor determined you will die from that condition.
Thank you.
Thank you. A lot of the conversations we've had today have been around planning, being proactive. Ryan, can you talk to me a little bit about being aligned with a real estate agent even before you're thinking of an actual transaction? Is it benefit to build that relationship early on?
Yeah, I mean, I think it definitely can't hurt. As we said, there are quite a few people that have real estate licenses here in Southwest Florida. There are actually about 7,700 realtors in Naples right now. And there's about double that have a real estate license that are not technically realtors. So there's definitely a lot of people that don't do it full time. So I think finding somebody that you can build a relationship with ahead of time is important. Somebody to bounce ideas off of is important. That's there for you, not necessarily to sell your house and make a commission, but to help you through the process and consult and figure out the best way to go about it. And to make sure that they know your neighborhood or development well. Yeah, I think that's a great idea.
How many of you have a car? How many of you have a trusted mechanic?
Maybe.
Would you rather, if you don't have that trusted mechanic, when do you want to have that trusted mechanic? In advance of your car breaking down or when it does? The same thing holds true from a real estate perspective. You want to have that quality, trusted individual in advance of needing to use them.
And I want to piggyback on that because the scenario that Brian brought up earlier, we had a relationship with these folks for, gosh, I can't even count the years. And it was very casual, let's just go look at property I'm never gonna buy, is how it started. And I'm like, I've got to learn my inventory. So I first started out as a buyer, interested in they were renting. It's turned out now they bought 3 properties, we've got referrals as well, but the point is not about my commission and what I'm making.
Sure.
I'm able to be an advisor from them before they need that mechanic, before their tooth hurts. Is that when you call a dentist? So finding a realtor that you like and trust are the most important things, and you develop that relationship very early on. Because there's things you don't know. So as you're going through the evolution, right now I'm working with a woman, we're sorting through her purses this morning, this is why I was late right now. We're sorting through her house, and we're gonna list it, not tomorrow, but it's so full of her treasures that she's having a hard time even thinking about taking it consent. So the conversation is really, really big. I'm seeing that she's probably gonna be in the house 10 more years, but I don't have a crystal ball. The point is, she and I are going through the process, because it is a process. Whether you're a buyer or a lister, it's a process. And just like anything else we talked about here, the earlier you plan, because you don't know what you don't know, and it evolves. So people will make decisions maybe sooner, maybe later, because of the information that you gave them. And your information may talk them right out of doing whatever it is, that's okay. Because you kept that client, you still have that relationship, and it's all about educating them, and they're feeling comfortable about whatever decision, when they make it, they're gonna feel good about it.
Yeah.
I have a question too. So as it pertains to long-term care insurance, do you, anybody on the panel and Adam, do you foresee these policies changing in the next, I mean, I know they've drastically changed in the last 20 years. Do we see them drastically changing in, let's say, the next 5, 10? Or do we kind of see these policies kind of leveled off and, you know, premiums kind of, you know, you could have the difference in the types of policies and premiums, but I don't know, I guess I'm asking, I know none of us have a crystal ball, but you guys are the experts, so.
So I'm going to use a different analogy. It used to be that when one invested, you typically looked at individual companies, stocks. Back about 50 years ago, there was the introduction on a more of a larger scale, something called mutual funds, right? We saw about 30 years ago where exchange traded funds or ETFs became more popular. We're continuing to see the evolution of different investment vehicles. We are going to see different models, options, things that exist for long-term care. As more and more individuals continue to be healthier, longer, the opportunity for something that is going to trigger long-term care needs is going to be more and more and more prevalent. And as a result, how do we bring the most amount of options to the marketplace? And that's where we will continue to see innovation in terms of different insurance options. Don't know what those are going to be, but we will see innovation.
And I think, in my honest opinion, it's to the benefit of the consumer. Because if you look at 20 years ago where you only had traditional long-term care insurance policies that you use it or lose it, that's not very attractive today, right? If you never initiated a claim and or your loved one is just activating a claim and sadly they're on their hospice bed, because we see that a lot. I think it's going to be to the only benefit of more options, more innovation to the end consumer. Yeah.
And is there a product available in today's market or past market or past time that would allow a policy to be activated if somebody lived here in independent living or maybe still in their private home?
Absolutely. So actually, Anthony and I had this conversation not too long ago. Someone living here at Discovery Village who lives in independent living, right, certainly can activate a claim against their policy if they have one with utilizing home care services. Again, going back to those qualifying events of the 2 or 3 activities of daily living and or cognitive impairment. But to put in perspective, and I'm glad you brought that up, is they will pay for the care needs. They won't necessarily pay for their room and board. That's where assisted living might be the next best option when it comes to making that transition, because if they have care needs, again, it's kind of like that all-inclusive, they're going to pick up everything.
So the policy will pay for the care needs, but not necessarily the rent?
Correct.
Okay. Where if the ADLs, the activities of daily living increase, and they would need assisted a higher level of care, then that pays for the rent as well.
Absolutely, right? Because it's all-inclusive within that licensure that the assisted living, memory care, skilled nursing facility would hold. Yeah, absolutely. At this time, I think it would be ideal to take any questions from the audience, if there are any. Any last questions? Yes, sir,
So I think I have a question for Jennifer, if I may.
please.
I'm still back on the Medicaid, because I appreciated what you said to us. If a person has a parent or parents living in their home, and they're responsible for their parent or parents, how do you protect your own assets if your parent, let's say, is at the poverty level or near the poverty level? And you're thinking about, you want to take care of them, but you got to take care of yourself.
Yeah, well, and when getting qualified for Medicaid, the two people they look at is the person, the patient, the person who's applying for Medicaid, the applicant, and their spouse. They do not look at family members. Family members are not required under Florida law in any scenario, before life or after death, to use their funds for the care of their relatives. So unless it's a child or a dependent, you do not have to provide for their care, or a spouse. And even spouses, actually, there's a vehicle where you can disclaim, you can basically announce that you are not paying for their care. It's a very hard emotional thing to do, but it's a financial thing that some spouses take the option to do, but in most cases they don't. But they do look at a spouse and the applicant. But that being said, to qualify for Medicaid, you can't just give away your assets to your children or to other people, because Medicaid, the state of Florida, will look at 5 years back from the date you apply for Medicaid and otherwise qualify for Medicaid. They'll look 5 years back, and if you've given away assets, what they do is they take the amount that you've given away and they divide it by a divisor, which is different each year. This year it's close to $10,000, $9,000 and something and change dollars. And so if you've given away $90,000, that means for 10 months, the state of Florida, even though you're otherwise at poverty level, the state of Florida is not going to pay for your care. They're saying basically, go get it back from whoever you gave it to, because we're not paying for it because you gave it away. It's a very dangerous thing to give the money away. That being said, if a parent is living in your home and you're taking care of them, there are some options where they can transfer some assets to you in order to get qualified for Medicaid, because you're providing personal care services that the state would otherwise provide if they're out of your home. So you can do a personal care services contract where they're basically paying you because you are providing the care that the state of Florida would have to pay if you don't provide that care. You can also, if you were living in their home, if it was the opposite scenario of what you presented, if you were living in your parents' home and you lived there for 2 years and you provided care for them, they can transfer their home to you. Now it's an exempt asset, so that's not saying a huge amount, but they can transfer that home to you and still qualify and go into the assisted living facility and have it being paid for by Medicaid and otherwise qualify. And that won't be a disqualifying transfer because you've provided 2 years of care in your home. So, I mean, the state of Florida, I think, and this is true of all of each state manages its own Medicaid program. But that being said, it's somewhat consistent from state to state. They all try to not impoverish the person completely, but they also don't want you to take advantage of the system completely either. So they want you to be able to, they want somebody, the well spouse, to be able to survive. They don't want to put the kids in a position where they're impoverishing themselves, but they also, don't want you to scam the system and be able to save $500,000 and let the state pay for your care and have a good level of care. So it's a kind of a balance.
There are also contracts available inside of long-term care that instead of paying the quote-unquote professional caregiver, that would actually pay the family caregiver the same proceeds in order to take care of the individual. Because, if we think about it, who would we rather have take care of us? Someone who loves us. And, we're always looking for, that whole component of LAVA. We're all looking to be loved, accepted, valued, and appreciated. And who can do that better than a family member?
And I think there's some perception, and when we're talking about Medicaid, is I could just write a check to my son in California and all of a sudden qualify for Medicaid. It's not that easy, right? So there's a right way of doing it. It's just navigating through that system. So, any other questions? If not, I always like to take the opportunity when we do a panel discussion to leave, so a couple things I heard here today is planning, right? Being proactive, aligning yourself with the right people who are sitting up here today that are really going to make your decision-making process a lot easier as you go through this aging process, whether it's the real estate transaction, the planning for the future from a financial perspective, and making sure that you're not creating any angst through your family with last-minute decisions when it comes to your wills and your trusts and all that, those things as well. So planning is a huge part of our conversation here today. But I want to go kind of down the line of leaving us with one last remark of the biggest takeaway that you can come up with from your perspective. And then also, because we are streaming live on our Facebook page, of how if someone is tuning in from afar, how they can get in touch with you. So Jennifer, I'll start with you.
Okay, so I mean, I think the thing that I keep hitting home is the more decisions you make now, the more time you take now, the more research you do now. It's a gift to your family later, and it's a gift to your older self as well. So, so take the time today so that you can have peace tomorrow. And I have my law firm on Marco Island. I'm at the corner of San Marco Road and Barfield in the CIT Bank building. It used to be Mutual of Omaha over there, right down the line from Marco Island Civic Association, where you get your beach passes. And you can call me at 239-610-1101 or email me. And you can check me out on my website, tennylawmarco.com.
Thank you, Jennifer. Brian?
Well, thank you very much, Adam and Carrie and everybody for having me here today. I'm certainly not a long-term care expert, and I feel fortunate to have participated in this because the amount of knowledge that you two have is amazing. So thank you for allowing me to do that. But, you know, I shared the same sentiments. It's pretty much planning. Use the time now before time is of the essence. Align yourself with the right people that you can trust. And I think you'll be okay. You know, it's we have nearly 600 agents with John R. Wood. So if you'd like to speak to me, I'm sure I can find a great one that works well for your needs. And my cell phone number is 239-297-8878. Thanks.
I would also like to thank you all for coming. It's been a pleasure to have you here this afternoon. Can we get a round of applause for Adam and his facilitation here today? The idea really goes back to the simpleness that we learned back when I was in kindergarten from Miss Ashwood. You either plan to fail when you fail to plan. The profound words of a kindergarten teacher. Are we going to do that? My name again is Bob Weigel. I'm on Marco Island. I'm in the SunTrust building on the corner of Collier and Bald Eagle. You can reach me at 239-970-8100. You can also reach me by email, bob.weigel, WEIGEL, @edwardjones.com. I meet people in the office. I meet people in their home, some other place that makes sense for them. Also do Zoom meetings, if that's something that you're familiar with. We also use rotary dial. Joke, we're not that funny people, so rotary dial. Thank you. Again, thank you all for coming.
Question?
Actually, I do have one question. So it's more of like a scenario that I had a couple of years ago. that there was a patient in one of the skilled nursing facilities, that I was in. And he applied for Medicaid. However, 3 years prior, he gave his grandson $5,000 for a new car. Not a new car, but a car that he can drive around. However, this was before he, wanted or even needed Medicaid. And, DCF and everyone, the Medicaid office saw this and they, denied him.
Yeah.
And he was around the poverty level. And he saved a lot of money for his grandson to do that. So is there any way that even though he didn't know he was going to need Medicaid 3 years from when he gave that gift, is there any way to bypass that, or is still, he needs to get that money back?
Yeah, so, that would only disqualify him for a month. So it was good that he applied, they would come back and they'd say, you're disqualified now, but come back a month later and you'll be qualified. Because you have to make the application and then you pay the penalty period. So it'd be nice to go back to the grandson and say, hey, remember that car that you bought me? How about paying for a month of my care? Because it disqualified me for care. And then now I can, qualify for care at this point. So that one's not too bad because the level amount. It's when people give away, like I said, $100,000 and that $100,000 is gone. Now it's disqualified you for almost a year. Who's paying for that year? Because it's not the state. And if you go back to the people who you gave the $100,000 to for, do they still have it? Can they still make it available? That's why it's so important not to do the gift. Now you can rectify the gift. You can give the money back. So you can always do that. So if you just gave somebody $50,000 and then you went to go to apply for Medicaid and they say, listen, you're disqualified now because of that $50,000, and they still have it in their account, they can give it back to you. You can then spend it down in other ways that might help them. Like if you're keeping your home, you could pay off your mortgage. You could get a new roof. You could buy a new car. You could improve. You could build a new bathroom. Put a new floor in. Put a new kitchen in. You can use your money in ways that increase the value of the assets that are exempt, and then qualify for assisted living in that way. So there's better ways to spend down. You just can't just give it away. You just can't do that. So you got to always ask before doing that. But sometimes people don't, and then we try to correct it, or we pay the penalty.
Thank you.
Any other questions? Well, I highly advise, if you have not found your trusted advisors, they're here today, right? So we'll be around answering any one-off questions if you do not feel comfortable asking them in a public setting. We'll be here for a couple minutes to address that. Again, my name's Adam Corcoran. I represent a home care agency here in Southwest Florida called Golden Care. We help with activities of daily living. And I am certified in long-term care insurance to really help advocate people who do have these policies that want to use them. So, and can we give a round of applause for Carrie and Discovery Village? Thank you all for coming.
Thank you all, and I really appreciate it. If anybody has any questions, I'm here to answer for Discovery Village at Naples. If anybody would like to tour today, I'm more than happy to